Good morning, everyone. The 10 o'clock hour is upon us, so we will call the March 12th, 2020 meeting to order. Item number 2 on the agenda is to approve the minutes of the meeting of February 13th.
Second.
Have a motion and a second on item 2. All in favor? Aye. All opposed? Motion carries. Item 3 is the consent docket. We can take these with one motion.
So moved.
Have a motion and a second on item 3. All in favor? Aye. All opposed? Motion carries. Item 4 is to ratify approvals. We have item A and item B. Motion and a second on item 4. All in favor? Aye. All opposed? Motion carries. I'm sorry, we hit 2 other items. Item 5 is to approve the claims docket. Have a motion and a second on item 5. All in favor? Aye. All opposed? Motion carries. Item 6 is to approve the following applications for service retirement. Have a motion and a second on item 6. All in favor? Aye. All opposed? Motion carries. Item 7 is to receive the report of death, authorize payment of the $5,000 death benefit, and approve continuation of pension to spouse. Have a motion and a second on item 7. All in favor? Aye. All opposed? Motion carries. Item number 8 is to receive report of death, authorize payment of the $5,000 death benefit, and authorize secretary to make necessary changes to conform on the following. Have a motion and a second on item 8. All in favor? Aye. All opposed? Motion carries. Item 9 is to approve the following application of vested rights. I have a motion and a second on item 9. All in favor? Aye. All opposed? Motion carries. Item number 10 is items for individual consideration. Item A is to approve the affidavit and agreement in regard to retirement benefits owed to Erman Ainsley. Does anyone have any questions on this item? Hearing none, the chair will entertain a motion on item 10A. Have a motion and second on item 10A. All in favor? Aye. All opposed? Motion carries.
What's his real first name?
That is his real first name, yeah. Yeah, we knew him as Charlie, but it's Erman. Yeah. Okay, items 10B through items 10H are all items that were in the assumption study that we discussed last month. Just so everyone on the board knows, we, the Plan Design Committee, met, I believe it was a week ago last Monday, and we had a teleconference with Louise, and we discussed all the items that we had questions about at the last meeting, and I believe the Plan Design Committee was comfortable with those recommendations after we received additional information from Louise and we had our questions answered. So if anyone has any individual questions on those, we can answer those, but we have to take each one of these items individually. So item 10B is to adopt the recommendation changing the current regular retirement rates to the proposed retirement rates summarized on page 4 of the assumption study, deferred from February 13th, 2020. I have a motion and a second on item 10B. All in favor? Aye. All opposed? Motion carries. Item 10C is to adopt the recommendation changing the current early retirement rates to the proposed early retirement rates summarized on page 4 of the assumption study, also deferred from February 13th. Have a motion and a second on item 10C. All in favor? Aye. All opposed? Motion carries. Item 10D is adopt recommendation changing the current termination rates to the termination rates summarized on page 6 of the assumption study. Have a motion and a second on item 10D. All in favor? Aye. All opposed? Motion carries. Item 10E is adopt the recommendation using the mortality tables listed on page 9 of the assumption study for future valuations and the life expectancies and mortality tables summarized on page 10 of the assumption study. I have a motion and a second on item 10E. All in favor? Aye. All opposed? Motion carries. Item 10F is to adopt the recommendation of adding a 20% corridor to the funding value of assets used in the annual evaluations as summarized on page 11 of the assumption study. I have a motion and a second on item 10F. All in favor? All opposed? Motion carries. Item 10G is to select proposed change to economic assumptions. 1, net investment return assumption to 7%, wage inflation to 3%, price inflation to 4%, or 2, net investment return assumption to 6.75%, wage inflation to 3%, price inflation to 2.25%.
On option 1 in the GRS study.
There you go.
On option 1 on the GRS study,
Yeah.
they had the price inflation at 2.25% rather than 4%.
That's on page 13, I believe.
Yeah,
Is that correct?
I believe that's listed under option C.
Let's look.
Page 12.
Page 18 of the
Page
GRS study.
18.
Yeah, under item C on the top of 18, that would reduce our proposed rate of return to 7%, wage inflation to 3%, and price inflation to 4%. Is that just a typo?
Yes.
Okay.
The spread is for the actual price inflation.
Okay. Okay. So with that correction to 2.25?
Well, it says here, approximately.
Well, but, yeah.
Okay.
But item number 2 would have us reduce the return rate to 6.75, and we're not doing that. We're going to 7. So we've got to go with
Okay.
recommendation 1 with the amendment to change the price inflation to 2.25%. Is that correct?
Yes.
Okay.
And that is my motion.
That's your motion. Have a motion and a second on item 10G as amended. All in favor? Aye. All opposed? Motion carries. Thanks for pointing that out, Jim. Good catch. Okay. Item 10H is approve resolution setting the net rate of return at 7% and declaring a present intent to reduce the assumed net rate of return for the Oklahoma City Employee Retirement System to 6.75% as prudently advisable to do so. If you all remember, we've been discussing getting our assumed rate of return down more in line with our investment experience. We're currently at 7.1%. This would knock it down to 7.0, and it's the opinion of the Plan Design Committee that when prudent, we need to take steps in order to get it down to 6.75%, but not right at this moment. So, Chair will entertain a motion on 10H. Have a motion and a second on item 10H. All in favor? Aye. All opposed? Motion carries. Item 10I is agreement between the Oklahoma City Employee Retirement System and the City of Oklahoma City regarding the city's obligation to provide certain professional and non-professional services and office rental to the ERS, and for the ERS to provide certain professional services for the city. The agreement is in your packet. Does anyone have any questions related to that? Hearing none, the chair will entertain a motion. I have a motion and a second on item 10I. All in favor? Aye. All opposed? Motion carries. Item 10J is Administrative Services Agreement between the ERS and the City of Oklahoma City for administration of the 457 Deferred Compensation Plans and the Money Purchase Plan and Trust, number 8751 and 7697 of the City of Oklahoma City. I believe that agreement is also in your packet. Does anyone have any questions regarding that? Hearing none, chair will entertain a motion. Have a motion and a second on item 10J. All in favor? Aye. All opposed? Motion carries. Item 10K is approved resolution of the trustee of the Oklahoma City Employee Retirement System authorizing and approving participation in private equity funds identified as Francisco Partners Fund 6 and Francisco Partners Agility 2 LP, authorizing the city treasurer and the retirement system manager to transfer investment funds to said private equity funds, and authorizing the chair or vice chair and the ERS manager to execute documents necessary to participate in said funds upon review and approval by and in consultation with the municipal counselor's office. Good morning, Jason.
Good morning. Seems unusual, perhaps, to be talking about private equity commitments in lieu of what's going on in the markets, but I think it's certainly appropriate that we continue to think about moving forward in volatile times. This is simply a private equity opportunity, growth equity, in a new firm, Francisco Partners, focuses on technology and technology-related investments. Much like the First Mark Fund that you just did, they're splitting their strategy into two pieces. One that is going to invest in companies with enterprise value between 125 and 500 million. And a second fund, what they call the Agility Fund, in companies under 125 million. Each of them will invest in about 15 to 25 companies. This firm, Francisco Partners, has a long and distinguished track record investing in the technology sector. They spun out of a firm called Texas Pacific Group, which long-time growth equity investor. This is their technology team. The presentation that we put together just on how we think about making commitments to private equity for your portfolio, you have a 5% target of the overall fund to private equity. It's intended as return enhancing. That 5% is, to achieve that 5% target in private equity is a little bit more elusive than it is in your large cap or your fixed income, where you can just today take 5% of your assets and invest it in those asset classes. Here, we have to make commitments to funds over time, meaning promises to fund them over time. They make investments in underlying companies, and as those companies mature and they can bring them to market, they sell them, they send you your money back. So we're constantly evaluating your capacity to make further investments to get to that 5% target. So the first page here is just what we call a pacing model, and we continually review this. Since we've put this together, probably some adjustments need to be made to it because the market value has dropped, but I think for purposes of this small of a commitment, we're talking $10 million combined, this is still reasonable. So what we're showing here is, on average, over the next several years, about $15 million in commitments can be made. And while these are highlighted in calendar years, we really look at this over as a 12 to 16 month forward-looking pacing plan. So that pace of about $15 million every 12 to 16 months would get us to that get you to that 5% target without going significantly over in a couple of years. As I mentioned, your market values come down over the last couple of months, so this would adjust that a little bit, but we're not concerned that you're going to get out over your skis too far here. And the reason why we want to do this is because of just what's happening now. If public equity markets and bond markets go down and your private market investments they're not mark to market, and you have these forward-looking commitments, we don't want to be too overextended in private equity. Many investors in 2008 and 2009, if you were making massive commitments in 2006, 2007, and early 2008, you could have gotten in over your head and had significant commitments above what targets were. We think this is still, this size commitment is not going to put you out in front of that target. Page 3 just looks at where you are today. Just as a reminder, so since you began your private equity program in 2009, which was actually a very good time coming out of the last major market correction, actually putting money to work after a correction tends to be a very opportune time to invest because you're investing at lower valuations. Early on, the first two commitments were to fund of funds. Mesero is a diversified fund of funds. Singular Guff is a distressed fund of funds that was investing in companies that were going through financial distress coming out of the financial crisis. That was $25 million in commitments. Those funds are pretty much, they're fully, while they're showing some small remaining commitment, very little is expected to be called of that. The Mesero fund has almost returned or distributed back to you 100% of capital that they called, and there's about $14.8 million in adjusted ending value. If you go to the bottom line, the totals, the two numbers that make up where you kind of are today in terms of private equity are the adjusted ending value. That's the carrying value that we're looking at. So from a overall investment standpoint, you have $34.6 million currently invested in private equity. The remaining commitment, there's about $28 million right now in unfunded commitments, meaning you've made those commitments and that capital has not been called yet. Most of that you'll see is in the funds, 2019 funds, Warburg, Pincus Global Growth, and then the two first mark funds. Since inception, your private equity portfolio is, you have $1.60 for every dollar invested and 13.6% IRR. The picture on the next page just looks at, from a diversification standpoint, how we're trying to build this portfolio, really wanting to broadly capture different market types. Warburg, Pincus, and Apollo are the biggest commitments that you have current commitments and active funds. Warburg Pincus is a global growth equity fund. It's investing all over the world in multiple different types of businesses in what would be considered typically growth equity. Companies that are going concerns but maybe not yet profitable and building. A little bit of startup capital and venture. And Apollo is a more distressed, later stage investor investing in mature companies, a more value-oriented play, which we would expect opportunities for that fund to pick up. They've actually had a hard time putting money to work since you made your investment in May of 2018. They've called very little of that fund, about 20%. The current environment is going to be much more conducive for Apollo. Francisco Partners, these two funds, you see where they, how they kind of fit in, more in the, we'd call this great, it's in the buyout square, but it's growth equity in technology. So they're investing in mature companies that are continuing to grow, but it is exclusive in the technology sector. Just some information on the funds themselves is in tab 3. I'll go right to page 10. The most recent funds, Francisco Partners 3, which is a 2011 fund, they invested $2 billion in capital, realized value of just under $4 billion. They still have $1.7 billion in unrealized value in that fund for a total value of $5.68 billion, or 2.5 times return on capital. So that's been if you go to the very far right, all of these funds since 2011 have been first quartile, in terms of dollar on dollar, as well as internal rate of return. The Agility Fund, they raised their first Agility Fund, which is investing in the smaller market cap companies in 2016. So far, that's been a very good fund, and it's about, what they try to do is about 25% of the capital that they raise goes into Agility and 75% into the to the flagship fund. That fund, a 1.5x since 2016, and about a 93% IRR to date. It's still early, but they've had a couple of major realizations there. So our recommendation is to make a $7.5 million commitment to Francisco Partners 6 and a $2.5 million commitment to Francisco Partners Agility Fund 2. Both of these funds are going to have a closing, a one-and-done closing. At least that was what was intended in April, by April 17th, and that's why the time frame is somewhat short when we're bringing you these funds. We bring them to you once we've completely done our underwriting, and oftentimes with these funds that are in high demand and oversubscribed, there is a short window of turnaround. So again, a recommendation of $7.5 million to Francisco Partners 6 and $2.5 million to Francisco Agility 2. And just a reminder, these are commitments. You're not funding these today. These are just commitments.
I have a question. Obviously, we've got about $28 million that has not been drawn in by the various firms at this point. When the firm gets an opportunity to
Make an investment.
invest, obviously they have other entities such as ours that have remaining commitments. How do they decide, or what's the process where they say, okay, we need $10 million and we've got a half dozen entities like the ERS? How do they decide how much they take from each?
It's pro rata. So
Okay.
if your commitment is 10% of the fund, every capital call you would be 10% of the capital call.
Okay.
So everything is every investor owns their pro rata interest in the fund and participates pro rata in capital calls and distributions.
Okay. I was just curious.
So they don't pick. They don't, okay, it's your turn, and now it's your turn. It's
Right.
it's everybody participates together.
Okay, thanks. Any other questions for Jason? Okay. And my agenda, hearing none, Chair will entertain a motion. I have a motion and a second. All in favor? Aye. All opposed? Motion carries. If I can find my agenda, we'll proceed. Oh, there it is. There it is.
Okay, well, you all have the February flash report in front of you, somewhat dated already. I think you all are making some tough but appropriate decisions coming off a year where your portfolio was up close to 18% and making decisions to lower your assumed rate of return. You know, I was talking to Randy before the meeting, and we've talked a lot about this, about our forward-looking expected returns our forward-looking, intermediate and long-term, we're not trying to predict what's going to happen in the next week or the next month or the next 3 months or even 1 year. They're really looking out over the next 5 to 10 years and over 20 to 30 years. So certainly what we're seeing in the markets today is unsettling, but we have seen volatility like this in the past. It's just been about 10 years since we've had it. But it's important to remember what we talk about here on a monthly basis, which is diversification and having a long-term plan. That's really the bedrock and the foundation of how you continue to grow assets over time by being good stewards of capital and thinking about the long term, making decisions like you're doing today from an investment standpoint on the expected returns. Being disciplined in rebalancing, being thoughtful about that. When things are going well, taking from things that have done better and diversifying into things that haven't done quite as good, and vice versa, which is always the more challenging. How do we decide to take, when do we get back into, not get back into because we're not abandoning equities, but right now, it's certainly challenging to say, okay, well, we need to be looking at potentially rebalancing and buying stocks. Fortunately, I don't think that right now where you are at the end of February, you're right on top of your targets, and there's no major needs for rebalancing at the current time. But the things that are helping are bonds. Your bonds have done very well. Many of us think, well, why do we have bonds? And we talk a lot about bonds here, and we were supposed to interview bond managers today. Put that off, not because we don't think it's a good idea still, but because of all the other things going on in the market and and in the world, not the markets, but what's going on in people's lives with the virus and concerns about travel. So just perspective, I'm not going to really talk too much about returns, but I'll just give you some numbers. Through yesterday, year to date, the ag is up. The Barclays ag bonds, investment grade bonds, are up about 3.8%. So that's about 25% of your portfolio, up 3.8%. The S&P down through yesterday, 14.8% year to date. I know this morning we went through the circuit breakers, down about 7%, could be down. Who knows what will be down today, 10, 15%. Keep in mind, 2019, the S&P was up 30%. So when we're right now getting close to where we were, if not right there, where we were in December of 2018, right back to that point. Small cap is down about 20%, international's down 17%, emerging markets are down 14%. What we are in regular communication with investment managers, keeping tabs as to what's going on, really trying to understand and making sure everybody, their business continuity plans are in place. Communications from managers have been great about what's going on with that. Just in terms of our own business, we are testing on a daily basis our work from home and remote access plans, having healthy employees stay home from work and access our systems, being able to get information from vendors, your custodian banks, and other vendors that we rely on for data, and all of that testing has gone well, and we're very confident that we can continue to operate. If everybody had to work from home, we would be fine to be able to continue to do what we do for all of our clients. The only challenge is, to some degree, perhaps travel, but certainly communicating with folks. So I just want you to know that we're available. If there's any concerns or questions, please reach out, and we'll be there to assist in anything that needs to be done.
Where's all the capital from this mass sell-off ending up? Are they just taking the cash, or are they
Well, a lot is going into bonds. That's what's
Bonds, yeah.
pushed Treasury yields down to 10 years at 50 basis points.
Yeah.
It doesn't just, the rate just doesn't change. It goes down because money is flowing into it.
Yeah.
But I think cash as well, and that's where it's going. People holding cash on the sidelines. I'm not sure if you received it this morning. I know my office sent out a memo just on volatility in the markets, periods of bouts of volatility. We've shown a slide before, just what it means to miss out on the 10 best days in the market. If you miss one of the 10 best days in the market, that can seriously erode your returns over any time horizon. And typically, in periods of times of volatility like this, where you have significant volatility, the biggest up days are in the midst of these down days as well. And so trying to time the market, get in and get out, is in our view, a fool's game. You have the benefit of being a long-term investor and being patient. It's difficult. It's not fun to watch what's going on, and human behavior wants a reaction. But I think the most important thing to remember, and we say this all the time, you have a plan, you have an asset allocation and diversification that's designed to weather the storm and get you through, and so that in the future your assets will continue to compound and you continue to invest, and we'll get through this. Just not fun as it goes along.
I had a phone call last week after the first day of the mass sell-off from a retiree that I worked with in Public Works. He called me up and he said, "B, what do I do?" I said, "It's too late." I said, "If you get out now, your chances of recouping your losses are probably, next to zero." I said, obviously, he's retired, he's in his 70s, his timeline is much more abbreviated than ours, but I told him, I said, it's too late, you've got to stay in. So I said, but again, that's your decision.
Right.
I'm telling you, you need to stay in. So it's just, panicked. So
Right.
anyway.
I'm sure Randy would have advice for that person to have adjusted his asset allocation based on his age at some point in time, but not after the market goes down.
Randy would charge you.
Yeah.
Hey, Jake, what's your sense of the economic damage that's being done by this pandemic? Do you foresee like a long-term clawing back out of a recession type recovery, or you see a bounce back?
I mean, we see and hear what you're seeing as well, and I think this is somewhat it's different than the financial crisis in that the banks are healthy, the banks are well capitalized and are going to be able to lend, but you have really just economic activity is frozen. People aren't leaving their homes and going out to dinner. I mean, going to Thunder games or going anywhere. And it's going to have a major impact on the economy over the next quarter or two. The bounce back, once this clears up, we think will be good. But it's going to, there's going to be some challenges. I was watching CNBC this morning, and I think there was, the commentators, there's a few comments that really make a lot of sense. Until we can get the financial concerns off the table, it's going to be hard for people to address the health issues appropriately. I mean, if people are concerned about losing their job or getting a paycheck, it's going to be difficult for them to, as Americans, to say, okay, I'm not going to go to work because I've got a cough or a headache or or whatnot. But that may be what needs to be done. I'm not a public health official, but, we're certainly hearing that from a number of folks. So the economic ripple of this, it's going to be big for earnings for the next quarter or two, and no doubt it's going to put companies in danger.
Any other questions for Jason? Thank you, sir.
Thank you.
Item number 12 on the agenda is comments from board, staff, and citizens. Hearing none, we are adjourned at 10:36. Thank you, everyone.